Hello, everyone. Don Garman here again from Mirador Capital Partners. If I'm doing a mid-month update, then there has been significant turbulence in markets. And obviously, we're now little less than 2 weeks from Liberation Day, April 2nd, where we've changed our trading part relationship with the world in one massive swoop. And I won't necessarily get bogged down into the pros and cons of where that change will lead. Hopefully, there will be some pros along the way. Certainly, that's the administration's expectation. What I wanted to focus on today is the playbook for the next few weeks to month, because this is obviously what's crucial to us. We don't always get the market that we want. We have to handle the market that we have. So I wanted to just give you a few clues as to how we're looking at this and what I think, at least from my perspective, is likely to be ahead. So obviously, this has been an extremely volatile period, and volatility, when it's straight down, is extremely unpleasant. It appears to have given way, at least in the last several days, to some extreme up and down movements. According, certainly last Thursday was an extreme up day that followed three extreme down days. The most significant change has been the magnitude of the moves. We're even in the midst of one here today where we've gone from up quite a lot, now just touching the flat line. We did this yesterday. Big intraday moves. And that's in big contrast to really the last 2 years where volatility was much lower than normal. So in some sense, this is actually more common. And it's why we get rewarded for owning stocks over longer periods because of the volatility. It's a risk premium that we get or expect to get by owning stocks over the long term, which we have enjoyed. This is the price we pay, which is sometimes we have to endure some pain. So I'm going to go back to what is objective and what we can measure and track and use that as a bit of a scorecard. So the numbers that you've heard me reference over and over again are the estimates for earnings at the S&P 500 level. What has been a challenge for analysts whose job it is to determine or make a guess as to what companies will earn is the violent changes in administration's policies from day to day. It makes it nearly impossible to make a model that would predict what you think will happen in the future with earnings. So if we have the space, Daniel will add a couple of charts that I sent him this morning. But we've talked about this 270 something dollar in earnings for this year, which was expected, a lifetime ago, a month or two ago. And we now have that number in the 260, mid 260s. But also there's a chart that it will accompany it, I think, which shows the slope of revisions. It's like a ski slope. It's like a double black diamond ski slope. So earnings are being marked down for this year that we're in rapidly. But we are starting the earnings season in earnest as we speak. We're kind of going right into the tunnel of the meat of earnings season right now. So Q1 earnings, are what's being reported now, and the conference calls that will accompany those earnings reports, to my mind, I can't think of a single reason why, if you're a CEO of a company, you would be bold in your positive outlook for the future of this year. The CEOs I talk to, and I talk to many, are just as confused as we are in terms of how to set the direction of their own businesses. It's impossible to know what tariffs will be what your therefore what your input costs will be, therefore what you price your products at, and to create a business that creates profit. So those things are still up in the air. So I'm envisioning a lot of CEOs will describe a level of cloudiness in their outlook, and analysts will use that outlook as an excuse to mark down earnings even further. If that 266 of 2025 earnings is going to go below 250, I certainly think it could and probably should and will, and into the maybe 240s, it's going to look a lot like a flat earnings period unless it gets significantly worse, which it also could. So the folks that have reached out to me asking, is this a great buying opportunity? My opinion, of course, as you've seen in our positioning, is not yet. But I do think in the next 3 months, we will get that, because I think analysts have a great incentive to mark their models down to a level where it will reflect a pretty dire case for the companies that they follow. They tend to mark them way down so that they don't have to do it repeatedly. What really matters to prices is that earnings are at a level where they're not declining, and even if they're a massive reset lower and we can start to move up again from those lower levels, that is generally how prices will flow. So all that is to say, I'm still positioned relatively cautiously for the time being and embraced for earnings. I still don't see a reason to not own the world's greatest business models and greatest businesses. We must own them. They are compounding machines. It's not a question of if they're going from making to losing. Some of them will. Those ones I think we've pulled out already, but some of them might go from making at this level to making at this level for now. In the past, they have found ways to adjust even to tariffs in the past and recover and move up again. So despite the turbulence and the discomfort, sometimes the best approach is to not overreact in either direction. And I think for the time being, that has, we're still in the whatever damage has been well contained, and it's not we're in easy recovery territory from where we are if things settle down. And so I think maybe we're in the process of seeing that now. Initially, just to prepare you, I would not expect that every day is going to be smooth going from here. Very unlikely. So, as I've said, not to be glib, but hopefully the spring flowers create some joy and we can spend time with our families and loved ones. We've been through these these uncomfortable periods before. 5 years ago, we were going in the heart of COVID. It was very uncomfortable. And so this too shall pass, which is why we can't get overly bearish or pessimistic about the long term. It's never been the right way to play. So I'm going to leave it at that, and thank you all for reaching out. This is what we do, and we're honored to do it. And this is a privilege to serve you. It's not always fun, and we don't always get to deliver awesome, positive news, but we try to deliver accurate news and an honest, transparent take about how we are looking at the setup for all of our money, obviously ours along with yours. So please reach out with questions. You've done that. We've had multiple calls and questions answered. And so send those texts. And if you need to set up a call, great. If you're not sleeping, that's different. Get in touch. So we've recovered a lot from where we were even a week ago. So that's a whole different animal. But most of you are managing to just brace and get through it. And that's what we're all trying to do. So on that note, I will say thank you again, and let us know if you need anything, and we will chat soon. Okay, bye-bye.